Hey guys, this is Market Update. Bitcoin is chilling out at an all-time high right now, but I still think there's a very long way to go for this cycle. So I just want to give you some info on that if you are looking, at potentially trading here, if you're looking to allocate, or if you're looking to take profits from whatever you're doing. So we are in this box right here, which I've drawn, which is the all-time high box you can see in the previous bull market. The second leg up here where we got rejected from, we're pretty much here right now, and we're just kind of chilling out in this level. There's really not much technical analysis you can do here. There is a support level down here, you can see that. Maybe we come down into it, but I doubt it. Flows seem very strong, and so maybe we just try and battle through this. But if we go to the month chart, you can see that we're pretty much at the level that we got to in the previous bull market closes, and actually above that now, right? So that was the close for the month right here. We're now above this. This price action, it's just a re-rating of the asset that you get in Bitcoin bull markets, right? And so this can happen for a very long time before it has kind of a really big candle that kind of wipes everyone out. That's what everyone's looking for, right? That kind of typical 20 to 30% drop where everyone gets over leveraged. Now, you're seeing meme coins just go crazy right now, and that really tells us where we are in the mini cycle. I think they're very good indicators to how the market is positioned at any given time. And so, maybe that's a little bit of a kind of bearish thing short term, because as the market gets overconfident, that's when it can draw back. But the ETFs for BTC are just kind of holding everything up. A rising tide lifts all boats, because there's just too much capital going into there. And if Bitcoin doesn't draw down by like 10 to 15%, then none of the altcoins will either. And that's just where we are right now. So as we kind of go higher and higher and higher, that risk gets worse that you get that drawdown. But look, holding crypto right now in spot, if you're holding spot and you just have that in your account, we are in an expansion phase. If you do trade, Bybit deposit bonus down in the description up to 30K. Check the link for the details. I've got some really, really important info in this video of why Bitcoin. What's happening right now with AI coming in and the disinflation that's going to happen from this is very important to understand. How AI and technology is driving prices down, and why fiat currency has to be debased. It must be debased to prevent complete collapse from the collapse in prices that technology is giving us. Bitcoin feeds into this as the escape valve. It is absolutely vital to understand this dynamic. In this macro cycle, here we are. We're not at the peak of this cycle. If you are trading, if you're worried about anything, we're right here. We're just breaking an all-time high. Usually when Bitcoin does that, it then just re-rates and goes up to the top of this range. Now this could be depending where we get there, right? So it's done on time as well. If we went right there now, like that would be 117K. But if you're looking at 2025, you're looking more like 150K. Anything up here, Bitcoin is very, very overdone for this current short-term macroeconomic cycle. But look, I think we're just in a massive re-rating right now. We're definitely not, very, very late stage. I would say still mid stage, but look, things are happening, right? So for right now, not late stage, but we're not getting cheap Bitcoin, right? 15K was cheap. This is not cheap anymore, but we're not expensive. We're sort of mid cycle. These are the Bitcoin ETFs compared to the gold ETFs, right? So this is why we're going up for BTC. There is demand for BTC, which is important because of its role with what's happening. Why is Bitcoin doing this as well? It's the ETFs, but look, there are many ETFs out there. Gold has ETFs as well. Why isn't that pumping? Well, Bitcoin's special, it's in demand. It's the Bitcoin that is the demand for that is driving this, not the ETFs. The ETFs are, a door that TradFi can get in, but they actually want to get in. That's the important thing. So this is the macro cycle from TechDev here. You can see this macro cycle and Bitcoin price cycles move in tandem, and we've just had a crossover. So the blue crossover here is the start. If you look back to all these previous cycles, the blue crossover is the start of a Bitcoin price cycle to the upside, and then the red When the liquidity cycle peaks down, that's where Bitcoin comes off. So liquidity in, asset prices up, liquidity out, asset prices down. But the long-term trend is to the upside because there's no other option, which I'll go over in this video. So that's where we are, right? We have the macro and liquidity cycle turning and also the door opening. It's like a perfect scenario, and this is what we were trading down in the bear market, and it's happening now. So sources of global liquidity, you can see that essentially just inflecting to the upside, right? So liquidity is inflecting to the upside. Bitcoin always has a price cycle like that, but we've got the ETFs as well, and that's the real flows that are coming in. And you know, that is this bull market. If you are trading Bitcoin here or meme coins, the best of luck. I truly mean that. I wish, you know, people in meme coins the best. They're up, you know, hundreds of %. So congrats if you're in them. Brilliant. That's trading. But if you have fiat currency, maybe consider that's not the place to take profits into. Maybe take profits into BTC. Or why is TradFi getting into BTC, right? The most intelligent investors here who truly understand some of these dynamics. New debt, this is the States, okay, it's going exponential. Now this seems worrying, right? Because if you or I had debt, and a lot of debt, that's not good for us because we can't afford to pay it off and then we go bankrupt. So we inherently get scared of this type of thing. If our balance sheet looked like this, with debt going like this, we're in big trouble. But that's not the case for governments, especially ones who have the world reserve currency and print the money. Right, so this is a different dynamic here. Now, of course, the US is now, national debt is now rising by $1 trillion every 100 days. $1 trillion every 100 days of new debt creation. And this is, of course, a bad thing, right? The issue is, this is actually how fiat currency is designed, and this must continue. It absolutely must continue. And here's why. Technology is driving disinflation. So technology reduces the cost of things. Digitization reduces the cost of things, right? It's cheaper to watch Netflix than it is to go to the movies. It's cheaper to listen to the world's music library online. You basically do that for free. That's a lot cheaper than having to go to an orchestra. Not just for the ticket, but I'm talking about if you go to an orchestra, the people in the orchestra, 50 people, had to practice their whole entire life to become an expert in playing the instrument. That costs a lot of time and labor and output just to play that one song one time, and that's it, and you listen to it. The cost around that, time, labor, capital, is massive. Now, AI can create a soundtrack for free. Massive disinflation, huge disinflation. Why is that a problem? Because the fiat currency system is created through debt. And if you have disinflation in prices, prices go down, GDP, what fiat currency measures, goes down, tax receipts go down, the debt is unpayable. The fiat currency system cannot let the nominal price of things go down. Can't do it. Because if the nominal price of things goes down, your house goes down in value, your mortgage is unpayable, you have negative equity, there is a complete crash worldwide, everything crashes, and we go back to a barter system. So technology is driving disinflation throughout the whole economy, and AI is demonetizing intelligence, which is insane. So before, you'd have to spend 25 years of your life in education. How much does that cost in time and energy and capital? It's a lot. Now you have intelligence being demonetized. This debt has to increase. In fact, you can think of it as the opposite of exponential technology. So technology is going like this exponentially. The debt has to mirror that exponentially as well to keep the nominal price of stuff up. Because if it doesn't, the whole system collapses on itself because you're on this debt. The reason why fiat currency has to be debased is to make the debt cheaper. So if someone spends $1 and buys the debt of a government, they have to make that cheaper by increasing the amount of money. Because what happens when they increase the amount of money, if they increase the amount of money by 5%, then in a year's time, right, so they increase the currency supply by 5% in a year, what happens is all the prices of everything reset because we've added more currency chasing the same amount of goods. Therefore, that dollar that someone paid the government before is now worth 95 cents. Right? They've debased it by 5%. What you're doing, right, by debasing the purchasing power of this by 5% is when you come to pay them back, you've decreased the price of that debt by 5%. So because our system, the fiat currency system, is built on debt, the only way to stop it collapsing is to debase the currency to make debt that you took out previously cheaper in today's terms. Now, a lot of people will say, stop spending money, stop debasing the currency, it's bad, man. If you did that, if you stopped debasing the currency, this debt would remain $1 and you would exponentially rise the cost of the debt that you already have. So you must debase the currency. Otherwise, you actually make the debt rise even quicker than it is now. We must have currency debasement. That is how fiat currency works. The fiat system is completely insolvent. Debasement of currency is necessary to make the debt we took out before cheaper. Spending, fiscal spending, monetary debasement must continue. It must happen, otherwise it actually gets faster. Recession is not allowed. Why is recession not allowed? Because in recessions, deficits actually increase even more. So you need to keep debasing the currency and giving people free money, which will turn into universal basic income, giving people free money for stuff. Because if you don't, the disinflation through AI and everything else actually reduces and disinflates prices even more. Currently, around $4 of debt are being created for every $1 of growth. So you may think that's bad, right? Like, why don't we just stop spending the debt? This is actually the wrong way to look at it. You have to look at it the other way around. Technology is disinflating prices so fast that we need to create $4 of debt just to keep prices where they are and put them up, right? They must prevent prices from falling, because if they don't, the whole system collapses and everyone goes back to a barter system. The only way to get out of this is by buying assets. I think Bitcoin's the best way to play this, but housing and stocks have done typically very well as well. If you are genuinely a long-term investor, and I think everyone looking at crypto, considering how volatile and unpredictable it is, should have at least a 2-cycle time horizon, which would be 8 years, preferably longer. We have to get out of fiat currency. We have to buy assets. So that's land or property, stocks, whatever, like crypto as well, whatever you choose. But Bitcoin is the best performing of the large decentralized indexes, in my opinion. Well, it's factually is that. This price action isn't really relevant if you have a 2-cycle time horizon. So the CAGR of Bitcoin, the 4-year CAGR right now, is 62% per year. So if you had bought the previous all-time highs, right, you'd bought here, this is the blue line where it starts. So you'd literally bought at the very bottom, which is great news, but then you just bought at ever increasing prices for like a year and a half, 2 years, up to previous 69, right? So you're saying to yourself, damn, I'm a bad trader because I've just been paying up and up and up all the time. Well, carry that through this bear market and now the price rise. The average yearly return would be a compounded 60% each year. That outperforms the NASDAQ, which compounds at around 17%, and it outperforms the S&P, which compounds around 10 to 12%, or has done in previous history. And it certainly out-compounds gold, and it out-compounds property. If you take US REITs as a thing for property, that they're compounding around 7%. So Bitcoin's at 60. It's way more volatile, but it's got a higher return and a higher Sharpe ratio as well. So if you have a 2-year time horizon or a two cycle time horizon, again, these prices not really relevant because it's compounding higher than all of the other indexes. If you do trade crypto, check out the deposit bonuses down below. My crypto investor course is down there as well. 300 videos on getting yourself up to speed and private Discord groups as well. I'm James with MyZG. Cheers for watching, and I'll see you in the next one.